blindly, right? Because I know that the average accuracy the strategy gives is very, very high, above 80%, above 80% accuracy from my back testing result and from all the times I've used to trade every month above 80% accuracy. So that's all I actually do. So don't increase your risk. Oh, this trade, Coach Michael said this one is a good setup. Let me use like half of my account. Oh, Coach Michael say this one, let me use 10%. Not just stick to your uniform risk. Okay. If you want to over leveraging is risky, but just over leverage with a uniform risk. If you want to, I'm not going to actually advise you to do that, but with high risk, high comes high rewards for I don't know people that have that type of mind. But it's not advisable. But even if you're going to over leverage, do not use on uniform risk. Make sure your risk is actually uniform. Okay. All right. So I'm done. It's only this GPS setup I can see. It's only this GPS setup I can see. So hopefully it gets there. Give us a very good reaction so we can be on 6-0. 100% accuracy this week. Our targets. It is done. Okay. So let me go through the currency pairs again one last time. And if you look at itself, from what I've been observing with the MC5, seems as if the strategy is working good now on MC5 this week. But this week is too short. I cannot gonna start making conclusions from just 1 week. I need to like look at it for like 2, 3 weeks. So I'll just keep observing. Okay, let me go through the market one more time before we continue with our training from yesterday. 5 minutes time frame. Okay. Mm-hmm. 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 Hmm. All these markets are selling. That's very, very good. They should keep selling though. So they can start giving us setups on pulse wave. It's been long time to get trade on pulse wave strategy. Because the market has been consolidating for a while now. To this 3 years again. So I'm just checking to see if I'm going to see any other setup I'm going to call out apart from the GPS the trade. Okay. That's what I'm actually doing right now. All right. So I can't see any other setup apart from that GP. BLC. Can't see any other setup apart from the GPS. So let's continue from where we stopped yesterday. So we stopped at I stopped at explaining which currency was I using for that my explanation yesterday. I stopped at explaining the difference between why the market moves up and why the market moves down, right? Do you have any questions from yesterday that we probably want to ask? Let's see anything you don't really understand very well that you need further clarification on. Okay. If you have, just drop in the chat box. And please feel free to communicate on the chat box. If you have questions, feel free to drop it on the chat box. You understand? And if I ask questions too, feel free to reply in the chat box because that's how I'm going to know if you're following through and how I can actually know when to go back and repeat what I said and when to jump to the next topic. If you don't post feedbacks on the chat box, I'll keep asking, are you getting, are you getting, are you getting? And before you know it, our time for this session would have actually been exhausted and we are not really going to cover much on the class. Do you understand? Okay, so I'm looking for the currency I used for the training yesterday because of the mark, because of what I drew there. Was it Litecoin I used? Mm. Well, I think this is what I used, GPCHF. Okay. No, yeah, it was GPCHF. Let me zoom into a little bit more. Okay, it was GPCHF. Okay. All right. Okay. Okay. So let me continue from where we stopped yesterday. All right. When the GPS declares, please don't forget to drop it on the chat box so I can know when it has actually cleared. Okay. So now this is where we stopped, right? So what I covered yesterday, I covered the reasons why currencies go up and go down, and the reasons why the market is actually either on an uptrend, on a downtrend, or consolidating. I also explained the base currency pair and the quote currency pair. Good. Now you need to actually understand that Forex is a very, very big marketplace. It's a very, very big, big thing. In fact, the most the richest people in the world, right? Like about I think 40% of them, maybe 60% of them are from the financial sector. And most of the people from that financial sector are from Forex, crypto, stocks. Do you understand? Are from those areas. So that means majority of the people in the world, majority of the richest people in the world are from the financial markets. So these things you're seeing now is what makes the most amount of millionaires in the world. Millionaires and billionaires. If you look at stocks, all right, Apple is the same candlesticks, it's the same time frames, it's the same support and resistance, it's the same everything that we are doing here in Forex. Let's say Tesla, the same everything. So basically, the knowledge you're getting from what you're learning in Forex is applicable to stocks, it's applicable to crypto, it's applicable to what they call indices, it's applicable to gold, to metals, every single thing. With this particular idea, you can do a few back testing and this and that, and come up with a very nice thing you can use to be trading stocks. So this is a very, very, very powerful skill set to learn. Now, the forex market is the biggest financial market in the world, and it trades an average of, if I slap this GPS here, it trades an average of $7.7 trillion every single day. This is not million, no. This is not billion, trillion every single day. I've forgotten the total. What is the total stock market actually? I think it was about 600 billion or so when I checked. But let's do that alone. But I know that it's not anything compared to for Forex. Let's say it's about 600. This for Forex. Stocks, on the other hand, trades about, I think, 600 billion daily. So the Forex market is 10 times bigger than the stocks market. What are the major players in Forex? We have hedge funds, brokers, banks, and so on and so forth. You know, organizations, huge organizations. These are the major players in the forex market. Now, the forex market is being influenced by a lot of things. I'm going to actually explain forex now with this to you. If you look at Naira, look at the value of Naira. Let me bring out, let me see if you can see NGN here. USD. Oh, sorry. NGN USD. Let me do something. Let me see if you can something like that. Something that's clear. Mhm. This is the value of Naira over the years. Okay. This Forex. If you notice something, you'll notice that Naira has been losing value rapidly. In fact, mhm, it just only stopped when it got to November 1st, 2023. Then since then, it has been ranging. It has been on an uptrend since. You can see it's going up. Then when it got to this particular point, it started consolidating. So it's consolidating right now at the moment. After consolidating, it may go down, it may go up. We don't know. But that was actually happening at the moment. Now, this is USD NGN. Okay. So according to what I thought yesterday, which is in the numerator, according to what I thought yesterday, which of the currencies is the numerator? Drop in the chat box. Which of the currencies is the numerator? Is it USD or NGN? USD or Naira, which is the numerator? Which is the denominator? Okay. So the reason why this currency has been rising like this is because of one thing. All right. The numerator has been way stronger than it. Remember what I said is either the numerator gains more strength or denominator loses more strength. So in this case now, due to weak financial policies, weak decisions, unemployment rate, um, what they call it, low GDP, high level of importation, fraud, corruption, Naira has been losing so much value. And because of the fact that Naira has been losing so much value, yes, it's also gained a little bit, right? It has been able to be, it has been pulling the NGN pair up to this particular point. So at this particular point now, we are making some good moves. Nobody's doing some things, and everything. And as a result of that now, you see, we are now pulling. See, before, we were not even able to pull back self. It was just like, pew, consolidate small, pew, consolidate small. Okay, yeah, we pulled back small. But after that, pew, then this is when they banned Binance. Then it now dropped down here. And later, pew, we see now we are fighting. And listen, so what influences the forex market going up is different things, a whole lot of things. Okay. What influences the forex market going up is different things, which all indicate how good or bad the economy is tied to that particular currency is. So basically, every single thing that determines how strong NGN actually is or how weak NGN actually is are different things that indicate how strong the Nigeria economy actually is. Now, we have lots of things like this. I'm going to list a few. I'm going to list a few of them. One of them is employment rate. Okay, let me start with what they call. Let me list them accordingly. One of them is interest rates. The second one is economic growth, GDP. Let me just put GDP there. GDP, which is gross domestic product. And that one again is employment data. And that one again is inflation rates. And that one again is central bank policy, trade balance. Now, this class actually recorded for those who maybe um are having issues connecting or maybe actually at work. They can actually go through the recording after. We have government stability and policies. We have geopolitical events, geopolitical events, and global sentiment. This is what we are trading on. These are the things that we are competing against. All these things that can just easily just make a currency, just start moving like an ogbanji. You know, we have foreign investments and capital flow. I'm going to actually briefly explain all these things. For then we end the session. Investment and continue from tomorrow. And Capital, capital flow. Okay. So interest rate, what's actually interest rate? Interest rate is the rates at which what do you call it? The banks actually borrow loan. You know, a lot of these companies actually rely on good interest rates to be able to run their companies very, very well. So in a situation whereby the interest rates are very, very high, a lot of foreign investors are going to not be interested in investing in the country. And apart from that, so high interest rates is going to basically increase the prices of goods and services in the country and different things like that. I don't want to go into depth because of time, but interest rates, monetary policies is one what they call it, indication of how good the currency actually is performing. Now, you can actually tweak the interest rate. You can increase the interest rate and reduce the interest rate to control inflation, which can actually affect your currency's value and all of those things. And but in general, interest rate actually determines the strength of the currency. Okay. The next one is actually GDP, right? GDP is gross domestic product. Okay. And it's basically the amount of goods being produced in a country. Now, every single country have values they provide to the world. China has the own things they produce, you know, toys, all of those plenty things. So other than that, they're constantly selling things to other countries, and that actually strengthens their currency. Okay, so if you have lots of goods you're manufacturing in your country and you're exporting to foreign people, foreign money is coming into your country. You understand? And because you actually have high GDP, your currency is going to be strong. When in a situation whereby you don't have what they call it, a good GDP, you're not even exporting anything, all you're just importing, your currency is losing lots of value. It gets to a point where you cannot even buy anything except with your currency from abroad because your currency has lost value. So they'll be asking you to bring dollars in order for them to give you what you want to import into your country. Now, again, is employment rate. Okay, high employment rate is equal to strong labor market and is equal to strong economy and is equal to currency strength, high currency strength. You understand? If there are more persons actually employed in the country, that means more persons actually doing work. That means people actually producing things and it's actually good for the economy. Inflation, we all know what inflation actually is, how valuable the currency actually is with time. You understand? Inflation rate, if the inflation rate is actually moderate, your currency actually retains value. But if it's actually very, very high, currency strength drops rapidly. Then we have central bank policies, and that's their own rates and all of those things. We have trades balance, that's import and export, all of those things. If it's balanced, you maintain value of your currency. But if it's imbalanced, you're importing more than exporting. And stuff like that, government stability, political stability, corruption, poor economic policy, investors run away when the country actually corrupt, a lot of bad things are actually happening there that are not actually favoring investors. People losing their lands, people losing their properties, things like that. You understand? All this diaspora money will not be entering the country. You understand? The other things like that. So these are the things that actually affect the value of the currency. But so once you see currencies going up and going down, is because of one of or more of these things. And now each of these things actually have news that comes out to tell how it has actually been. I'm going to actually explain that tomorrow, Sha. That's actually fundamental news. But this is where I'm going to stop at. This is where I'm going to stop for now. I'm going to drop the record of this session. I want to actually take your time to go over it so you can actually get the full information. I'm going to continue from here tomorrow. All right, from here tomorrow on the next session, 11.